Hi everyone, welcome back to the Investing Iguana, where we talk about all things related to stocks, investing, and personal finance. I'm your host, Iggy, and today we're going to discuss why we think AstraZeneca is a good buy with the 8% price drop. AstraZeneca is one of the largest biopharmaceutical companies in the world, with a focus on oncology, cardiovascular, respiratory, immunology, and rare diseases. You may have heard of them recently because of their COVID-19 vaccine, which they developed in partnership with Oxford University. But today we're not going to talk about the vaccine, we're going to talk about another drug that they have in their pipeline, which is called datopotamab deruxtecan, or Dato-DXd for short. Dato-DXd is a new cancer medicine that targets a specific protein called TROP2, which is found on the surface of many tumor cells. Dato-DXd works by delivering a potent chemotherapy agent directly to the tumor cells while sparing the healthy cells. This way, it can kill the cancer more effectively and with fewer side effects than traditional chemotherapy. Dato-DXd is currently being tested in several clinical trials for different types of cancers, such as breast cancer, gastric cancer, and lung cancer. The most advanced trial is called TROPION-Lung01, which involves patients with non-small cell lung cancer, NSCLC, the most common form of lung cancer. NSCLC accounts for about 85% of all lung cancers and has a poor prognosis, with only about 24% of patients surviving 5 years after diagnosis. On Monday, July 3rd, AstraZeneca and its partner Daiichi Sankyo announced the results of the TROPION-Lung trial. They said that Dato-DXd helped patients with NSCLC live longer compared with standard chemotherapy. They also said that the drug showed a statistically significant improvement in progression-free survival, which means how long patients live without their disease getting worse. This sounds like great news, right? Well, not exactly. The market reacted negatively to the announcement, and both AstraZeneca and Daiichi Sankyo shares dropped significantly. AstraZeneca declined 8% in London on Monday, the most since March 2020. Daiichi Sankyo shares fell as much as 15% in Tokyo on Tuesday, their biggest intraday decline since 2008. Why did this happen? Well, there are a few reasons. First of all, investors had widely anticipated successful clinical test results for Dato-DXd, so they had already priced in some of the positive news. Second, AstraZeneca and Daiichi Sankyo did not provide much detail on how much longer patients lived overall or how much better they did in terms of progression-free survival. They only said that there was an early trend signaling a benefit for survival and that the data was not fully mature yet. This left analysts and investors wondering if the benefit was clinically meaningful or not. Third, AstraZeneca also reported some deaths in the trial due to some grade 5 toxicity events, which are serious adverse reactions that can be fatal. They did not specify how many deaths occurred or what caused them, but they said that they were investigating the cases and that they were confident in the safety profile of Dato-DXd. However, this raised some safety concerns among investors and analysts who wondered if the drug was too toxic or if it had any long-term side effects. So what does this all mean for AstraZeneca and Dato-DXd? Well, it's not all doom and gloom. The fact that Dato-DXd showed a survival benefit in NSCLC is still a positive outcome that could lead to regulatory approval and commercial success. Dato-DXd is also being tested in other types of cancers where it could show even better results. Some analysts have estimated that Dato-DXd could generate as much as $18 billion in sales if it succeeds in all its indications. Moreover, AstraZeneca has a strong portfolio of other oncology drugs that are doing well in the market, such as Tagrisso, Imfinzi, and Lynparza. These drugs are expected to drive growth for AstraZeneca in the coming years and offset any potential losses from its older drugs that are facing generic competition or patent expiration. So why do we think AstraZeneca is a good buy with the 8% price drop? Well, because we think that the market overreacted to the news and that AstraZeneca is still undervalued based on its long-term potential. AstraZeneca has a price-to-earnings ratio of 45.87 as of July 4th, which is lower than its peers such as Pfizer, 50.82, Merck, 54.62, and Roche, 54.87. AstraZeneca also has a dividend yield of 2.12%, which is higher than its peers and provides a steady income for investors. If we look at the historical stock price of AstraZeneca, we can see that it has been on an upward trend since 2013, when it started to invest heavily in its oncology pipeline. The stock reached an all-time high of 75.81 on April 24, 2023, before dropping to 71.57 on June 30, 2023. This means that the stock is still up by about 33% year-to-date and by about 240% in the last 10 years. We think that this drop is a temporary setback and that AstraZeneca will bounce back once it provides more data on Dato-DXd and its other drugs. We think that AstraZeneca is a solid company with a strong pipeline, a diversified portfolio, and a growth-oriented strategy. We think that AstraZeneca is a good buy with the 8% price drop and that it will continue to reward investors in the long run. That's it for today's video. Thank you for watching the Investing Iguana. If you enjoyed this video, please give it a thumbs up and subscribe to our channel for more content like this. Also, let us know what you think about AstraZeneca and Dato-DXd in the comments below. Do you agree with our analysis or do you have a different opinion? We'd love to hear from you. Until next time, happy investing.